Everyone's heard the story of Robinhood, the fictional air shooting vigilante that became famous for robbing from the rich and giving to the poor. But what do you know about the much hated Robinhood trading platform, apparently famous for doing the exact opposite? The legend of Robinhood stretches back to the 15th century. It was an inspirational story about justice, equity, and of course, excellent archery skills. But these days, Robinhood is the name of a commission-free asset trading platform that's been accused of doing the exact opposite of its medieval inspiration, fleecing smaller investors for the benefit of market whales. The criticism and hate only intensified after its disastrous IPO in late July. So why are IPOs a risky move if you're not prepared? Is Robinhood a good investment tool for investors? And what other options are out there for stock trading and investing that you should be aware of? Let's jump into it. Most novice investors became aware of GameStop back in early 2021 during the infamous GameStop squeeze. For those who've been living under a rock, GameStop share prices have slowly been declining throughout the years as a result of online purchases of games and digital delivery. This has only escalated with the COVID-19 pandemic throughout 2020. And as a result, the GameStop share price has hit its lowest point in the company's history. And with GameStop shares being so predictably low and continuing to decline, large-scale investors and hedge funds had been essentially short-selling GameStop. And users on the subreddit forum Wall Street Bets took notice to this and noticed the trend, and what they decided to do was buy as much of GME stock as possible. This in turn created a short squeeze. And just apart from being one of the most hilarious things, it's actually one of the most influential digital protests against Wall Street to date. Now, many of these Reddit investors use a platform called Robinhood for their trading, and the name made sense because it was a little guy versus the Wall Street industry, and for once it felt like a win for the underdog. However, on January 28th, Robinhood decided to restrict all trades of GameStop stocks, citing regulatory and volatility reasons. This infuriated Robinhood's base, causing them to miss out on the opportunity to cash out at the peak of the squeeze. The truth is, they'd simply just run out of enough capital to facilitate all the orders going through their platform. They even raised $1 billion in emergency capital, however trading was still restricted on GameStop heavily. I'm talking about maybe 1 or 2 shares a day where you were able to trade. It was a move that many saw as favoring the Wall Street establishment. While individual investors were stripped of their ability to make money, hedge funds and institutional investors were able to continue trading as normal. This resulted in tens of thousands of one-star reviews on Google and Apple's app stores, to the point where the 2 large tech companies actually had to come in and remove some of them. Since then, Robinhood has worked hard to improve its services. However, with its recent IPO debacle, many are wondering if it's the same thing all over again. For those of you new to the world of investing, an IPO or initial price offering is when a company takes itself from being a private company into being a publicly traded one. They're limited by their shares and are available on the stock exchange. Generally, companies wait till they're in that unicorn phase or a valuation of $1 billion before going public, in which case Robinhood actually already smashed that back in September of 2020 when they hit that $11.7 billion valuation. So here's the thing. On July 28th, Robinhood launched their IPO as a publicly traded company for the very first time. Immediately, the price dropped from $38 to $35, about 12%. And Bloomberg even called that one of the worst IPO debuts in the history of stocks for a company of that size. Now, a week later, you had that stock go up to about $72. And then a week after that, it went down to $55. And this is where all the risks come in with IPOs. Traditionally, IPOs have been seen to make profit in the short term over the initial positive price fluctuations. However, the opposite could be true as well. A lack of confidence or a lack of sales in an IPO could cause it to go down significantly for months on end until it actually settles down. And I will also say this, I do not know, and I think it is too early to tell whether or not Robinhood's IPO was successful. But in general, IPOs do good things for companies. So why is it good for companies? Well, the massive capital injection through an IPO means that the companies can start to execute their plans of expansion, so they're able to acquire new assets, hire more personnel and staff, as well as absorb other companies. Publicly traded companies also have access to better credit lines and interest rates. It's also much easier to do additional rounds of fundraising through secondary offerings. There are also distinct brand advantages that come with being a public company. You're afforded a certain level of prestige and public image that comes with being a legitimate corporation. This also helps when it comes to attracting skilled employees and high quality staff. And despite all the noise and criticism, just keep in mind that They've only been live for about 2 weeks at the point of this video, and the company's IPO has actually pushed its valuation to approximately $29 billion, leaving co-founders Vlad and Baiju worth approximately $2 billion each, as they each have an 8% stake in the company. Now, it's important to note that an IPO's initial performance doesn't necessarily dictate its future success, and here's two perfect examples of that. When Google's parent company Alphabet launched their IPO in 2004, investors made approximately 18% on that first day. But since then, they've made about 1,000%. Then we have Facebook, who launched at $42 per share. They lost a staggering 25% within the first 2 weeks of trading. But the investors who decided to hold out and didn't panic sell, they're up approximately 400% since then. Only time will tell whether or not Robinhood's IPO was a success or not. But how does Robinhood as a trading platform stack up against its competitors? Firstly, let's address some of the main complaints that Robinhood users have about the platform. One of the biggest complaints for Robinhood, and probably one of the most annoying ones, is their lack of customer service support. Robinhood's customer support is just notoriously bad. I mean, we're talking about waiting weeks for a reply in their help section in their app. We're talking about waiting hours on the phone for a phone call. We're talking about getting no response to emails. I mean, it's really bad. They have a general lack of urgency for important issues as well, such as outages. But with all that being said, they have improved since the beginning of the year, and I can only imagine that with the cash injection through the IPO that they're going to be getting even better. But time will tell. I do see though that they are improving, just not as fast as I would like. The next thing is they run a payment for order flow model. What that means is instead of searching for the best stock price, Robinhood is selling your data to HFT firms for big profits, which then the HFT firms use that data to enhance their retail money algorithms, making even more money. And then there's a lack of pro features. So a lot of the advanced analytics tools that come standard on most of Robinhood's competitors is actually considered a premium feature within Robinhood, so you have to pay an extra subscription for that. But I wouldn't worry too much about that if you're a beginning or a novice investor, as a lot of it could actually turn you away. I've actually personally seen people who get turned away by overly complex data analytic tools. So that's just something to consider though. And on the flip side, let's take a look at some of the things that make Robinhood an absolutely necessary tool for beginning traders. Despite all the doom and gloom, I would say for the average investor, Robinhood is not only useful, but it's necessary. First things first, Robinhood is absolutely user-friendly. It was designed originally for that novice investor, the first-time investors, and because of that, their mobile application and their website are extremely intuitive and easy to use, so you won't get scared trying it for the very first time. And the next thing is commission-free trades. So Robinhood really pioneered that $0 fee trade structure, and because of that, you're getting an influx of newer investors who weren't able to invest before because, you know, why would you invest in something if the fee could cost more than what you can afford to buy in the stock? And finally, it is free to use. So there are no minimum balances and no monthly service fees associated with Robinhood. You can get started investing with just $5. And if you're interested, by the way, I have a link down below in the description that'll get you started with some free stocks. But there are also other solutions out there if you're not interested in Robinhood. First up, we have SoFi. So SoFi is more about the suite of tools available rather than just trading. But however, on the trading end, you can trade stocks, bonds, crypto. They also have automated trading, which is a pretty neat thing. You also have access to a free financial planner to help you plan out your financial success. You also do have access to other tools such as their consolidating debt loans. You have access to their SoFi bank account. You have access to their SoFi credit card, which gives you 2% cash back. And you can actually use that to auto invest into stocks as well. You also do have access to something called Relay. So Relay is pretty neat. You can link up all your investment accounts, your bank accounts, your credit cards, and you basically get a snapshot of how your spending is going month to month. And then we have WeBull. So WeBull is more for the intermediate investor. So with WeBull, you have access to a plethora of different charts and graphs and advanced analytics tools. It's really neat and really cool to use. However, it can be overwhelming for beginning investors. So if you are a beginner, I would recommend starting with either SoFi or Robinhood. And then from there, if you feel more comfortable, you can always transfer your stocks over to WeBull. I think they have a promotion going on where they cover your transfer fees. It's also a commission-free based trading, so there's no commissions when you buy, there's no commissions when you sell. And it's also a really robust platform. It's definitely really cool to use. It just can be a little cumbersome for beginning users. For all its flaws, Robinhood probably doesn't deserve all the hate that it gets. I mean, WeBull, SoFi, even TD Ameritrade all suspended trading of GameStop, albeit a day later, but they still did it. And you have to understand that Robinhood's been instrumental, and it's actually been a pioneer in bringing newer investors into the stock market, increasing the market cap, and people have even gotten rich by using Robinhood just because they never knew how to trade before, and then once they started using Robinhood, they got familiar with it and they made them gains. Now, with all that being said, we can only assume that the massive cash boost that comes with an IPO, services and offerings that Robinhood is going to be providing will only improve over the years. If you want to ask me personally, do I think that Robinhood is a great platform to start with for new investors? Yes, I do think that Robinhood is great for newer investors. If you're looking for something more advanced, I would check out something like WeBull, but I think just for most people, that the average Joe, average Jane, I think Robinhood will be good enough. And that's all from me. I hope you guys enjoyed this video. If you did, be sure to hit that like button and subscribe. It does help the channel out a lot more than you know. And also, if you have any other topics that you'd like me to cover, or if you have any general comments, leave them down below in the comment section. Until next time.